Union Pacific Railroad is a company that I've been following for some time, and it is a stock that I find very desirable. I'm not currently a stockholder, and they just announced their earnings. I wanted to see if I update my analysis and look at the current share price. Is it a good stock for me to start buying? I'm going to go through that in this video and share that with you. Union Pacific has been around for a long time, and they've been a very consistent company. If you look at their operation, it's been very consistent. Earnings per share, cash flows, and so forth. So it makes it a company that is really desirable by many investors. In fact, their market cap is quite high compared to other logistics companies. They announced their earnings, and they announced their earnings on the 24th of October. I think the earnings were solid. I think they had a pretty good earnings report. They had their earnings per share went up by 10%, operating income up 11%, and third quarter net income was up 9%. So those really show that the business is being operated really well. Shows that the management team, as well as all the employees at Union Pacific, are doing a great job. This is a really consistent company. And when they guide to the future, it's for them to have modest growth going forward and continue to create additional value on that earnings per share, make it a little larger. They're also going to buy back shares of their stock. So that's a positive. Overall, railroads are owned by a lot of super investors. And this one in particular is probably the one that I've liked the most as I look at railroad companies. Now, let me take a closer look at their financials and see where I think the company is valued. I'd like to ask you to be a paid member of the community if you want to be more involved with the discussions we have around stock investing, as well as workshops that we have each weekend. If you're interested in being more involved, I encourage you to take a look at the details that I've got on this video. You can look at the 3 different member levels that I've got available. I'd appreciate your consideration and thank you in advance. Union Pacific is a $139 billion market cap company, and their revenue is $24 billion. So you can see the premium that investors are willing to pay for railroads. It is a very desirable business in general. They have a good profit at the end of the day. Their PE is 21 for the current year, but in 2025, it's expected to come down to 19.64. Dividend is at 2.33%. Analysts believe that the stock is discounted at this time. You can see that over the last month, the stock has given up some value. So is it a good opportunity to buy? That is the question that I have about Union Pacific. One of the things that I really like about Union Pacific is the consistency. You can see that they've grown their revenues over time. Nice upward trajectory on their revenue. And in that time, they've been profitable every year. Again, consistency. Net income each year, a really healthy amount. Free cash flow has also been a very healthy level. So when you have these consistent companies that continue to operate as expected, very little surprises, there is a premium on these types of companies that is desirable to me, and I like what I'm seeing. When I look at the balance sheet for Union Pacific, it's in good shape. They have net debt of $31.7 billion. And if I look at EBITDA, it's $12 billion. So debt to EBITDA is less than 3, meaning that in less than 3 years, Union Pacific can pay off their debt if they focus their EBITDA toward paying off debt. So it's a healthy balance sheet and a very consistent company. 20 analysts cover this stock, and they have a lot of respect for the stock. And this is what I mean. The stock is trading at $230 a share, and the high that one analyst expects the stock to be valued at is $283, and the low is $210. So not far from its current stock price is the low, and it has some good upside. Overall, there is a discount available on the stock of 12.5%, according to analysts. They based this opinion primarily on earnings per share. Earnings per share is expected in 2025 to be $12.62. I'll use that in my evaluation and model to arrive at what I think the stock is worth. The earnings per share continues to grow, and it's expected to grow around 10 to 12% per year for the next couple of years. So I've taken the free cash flows that Union Pacific is going to be producing, and I've put a cash forecast together and then valued the company based on the cash flows they're going to produce. I also looked at earnings per share and valued the company using their earnings per share projection. At the end, I get a 23% discount available on the stock. That's a good discount on a railroad. This is a desirable business for me and a very healthy discount. I consider Union Pacific a very desirable business because there's strong barriers of entry against other competitors. Let's face it, starting a new railroad company is extremely difficult. In fact, you may not be able to. So Union Pacific has a natural barrier to keep competitors out. There's few options to move freight from ports to the market where that product is going to be consumed. Therefore, I put Union Pacific in the most desirable quadrant of my desirability quadrants. And I do put them slightly in the gray, which is where there's competition. And I say that because there are other rail companies and there's other methods to get goods to market, like trucking and so forth. So there is a little bit of competition, but mostly this is a very desirable business that is worth a premium. Now, I really like the discount of 23%. I like this stock, and I'm not currently in a logistics company. So this is a good opportunity for me to buy into the stock. Now, I'm going to wait 2 weeks. And the reason for it is we have an election coming. And I think if the election results are that we're going to get a leader in the White House that is going to put a lot of tariffs out there, that may affect Union Pacific. If you have a lot of tariffs and you have less importing, you may have less freight for Union Pacific to handle. That's the case. Maybe the stock price drops a little more in a couple of weeks. So I'd like to wait for that to happen. And then I'll start to dollar cost average in my investment in Union Pacific. Hopefully that plan doesn't backfire on me and the stock takes off, but that's one of the risks. At this point, I'd rather wait until that election gets done, see who's in the White House, and then start buying or not buying into Union Pacific. So that's my video on Union Pacific. I think it's a terrific company. It's currently discounted. I think it's going to be a consistent company going forward. And it'd be nice to have a stock of that type in my portfolio where I have some stocks that are far more risky that provide a higher return potentially. This one would just be a really steady stock that can go up over time and give me that dividend. So that's my video on Union Pacific. Keep in mind, I'm just an investor sharing my journey on YouTube. I'm not providing any financial advice, and everything that I've shared should not be taken as any recommendation to buy, hold, or sell Union Pacific. Please do your own due diligence and good luck with your investments. Thank you for watching.